What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Do me a big favor, guys. Get down to that description box. We got a couple links down there. The first one is going to be that Moo link. Don't sleep on it, guys. Got a wonderful, wonderful, wonderful offer from the good folks at Moo. And let me walk you through it, because I think it's one that you may want to pay some attention to. Here it is. Moo is offering you up to $1,100 in stock rewards and NVIDIA shares. If you deposit $1,000 in your new Moo brokerage account, you'll get $120 in cash rewards. And if you make additional deposits, you can get up to an additional $1,000 in NVIDIA stock shares. Like I said, guys, first link, check it out. I'm not saying you got to do anything. I'm just telling you to check it out because these good folks at Moo are offering you this. Now, who is Moo? It's a self-directed brokerage app. I've been using Moo since 2024, and it's worked fantastic for me. Now, that doesn't mean it'll work fantastic for you, but what I can tell you is there are millions and millions of other people around the world that use the Moo self-directed brokerage app to make investments. Now, again, self-directed means they don't give you any financial advice, just like I don't give you financial advice. That's why it's called self-directed. But it provides you a brokerage account, a brokerage platform where you can make your own decisions. So if you're comfortable with that, check out that link, man, and get yourself up to, like I said, $1,100 in stock rewards and NVIDIA shares. Second link, Wealth Builders Financial Community on Patreon. That's my community I started in 2024 on Patreon. We got a couple thousand wealth builders in that community. None of us are experts. None of us try to tell you what to do. We're just a group of like-minded people who decided to start their own financial community so we could support each other in our wealth building efforts. So what are we doing there? We have a community chat that's going every single day where wealth builders go in there and they share ideas about building wealth. Or what's your option? You can stay in the matrix where nobody is sharing anything with you. That's your option, right? So for me, I would ask you to check out the second link, which is the Wealth Builders. Now, of course, that's the only place that you have direct access to me to ask me questions. Again, I'm not a professional. I'm not a financial advisor, but I do have 30 years of experience investing on my own, whether it be in real estate for income, paper assets, starting businesses. I also have worked 25 years in the banking industry prior to retiring in 2019. So not saying that I'm an expert, but I am a person that has some experience in the big three. And I will be more than happy to share my opinion. That's all it is a personal opinion with you, but that's the only place I'll share it is on Patreon in the financial community called the Wealth Builders. You can send me a DM, let me know you're there, and you can ask me any question that you want, and I'll be more than happy to give you my opinion. I'm not a professional. I'm not a financial advisor. I'm just a guy with some experience who is willing to share that with you. So if you want to be a part of that group, and then the bigger picture is you got 2,000 other people who have different degrees of investment experience from all kind of backgrounds, from different countries, everywhere in there. So you got 2,000 people, man, to bounce ideas off of. You're not going to get that in the matrix. So check out those two links, and then let's go ahead and dive into our topic today, which is job losses skyrocket. We're going to talk about that one. We're going to also talk about paper assets, stocks and crypto. Again, no expert here, just giving you my opinion, right? Personal opinion. You go out and do your own homework when it comes to stocks and crypto. You got to go do your own homework, guys, because I'm not a professional. I'm just giving you my opinion. And then the last thing we're going to talk about are these rate cuts. The likelihood Will we get a rate cut on December 10th, which is what, next week? It's a week from today, guys. Today is December 3rd. Will we get that rate cut in 1 week? That's the question. So we got to talk about that, and we will talk about that. And again, give you my opinion from just the research that I've done. So that's all I'm going to do here today, guys, is give you my opinion on those 3 topics. My recommendation now, you go out there and do yourself additional homework before you make any sudden moves in your financial life. But let's start with the job losses, because I think a lot of people thought, oh, shoot, we've turned the corner. We've turned the corner. We ain't losing jobs anymore. September report came out and said we turned the corner. Unfortunately, what was that? Yeah, September report. October report came out, and it seemed as though we had turned the corner and everything was starting to go back up in the job market. But nope, we got the November ADP report, and it says a whole different story. It says job losses reversed. When I say job losses, they went down. That's what I meant by reverse. They went down. Matter of fact, that went up. I'm confusing myself. Job losses went up, not down, up in the month of November. They went down in the month of October. So let's clean that up. So here we go. Private payrolls unexpectedly fell by 32,000 in November. 32,000 in November, led by big cuts in small businesses. Let's stop right there. Who gets hurt most in this job loss arena? Who gets hurt the most? Number one, the consumers, us, the people who are employed, get hurt the most. The second in line is going to be small businesses, right? Because 95% of the businesses in America are small businesses, guys. 5% are large businesses. So, consumers, me and you, or employees, not necessarily consumers, we are consumers, but we're employees, people that work for somebody, get hurt the most. But secondly, small businesses get hurt the most too. They're second in line. So led by small businesses, establishments with less than 50 workers cut 120,000 jobs last month. Remember, guys, 95% of the businesses in America are small businesses. Small businesses with 50 workers or less cut 120,000 jobs last month. Large businesses with 50 or more employees reported a net gain of 90,000. So that 5%, which are large businesses, actually had a gain. But your small businesses had a major loss. So when you net the two out, there's your 30,000, right? Because small businesses lost 120, big businesses gained 90. So there's a $32,000 loss there. The concern is 95% of the businesses in America are small businesses. So you got to ask yourself, where do we go from here? Now here it is. Estimates from The Economist poll by Dow Jones expected a gain of 40,000 jobs. But instead of a $40,000 job gain, we had a $32,000 job loss. Why is that important? Because, guys, when people are losing their jobs, guess what that does to our economy? Goes down in the crapper. When people are losing their jobs, guys, people stop spending money. And when people stop spending money, what happens to our economy? It goes down. And if it goes down too much, what then happens? Recession. And when a recession happens, It's just not good. We don't want a recession. We want to be able to have a what? A healthy labor market. And right now we don't have a healthy labor market. 1 month we add some jobs, the next month we take a big loss. You know what I'm saying? So that's not what you want. You want to consistently be adding jobs throughout the year, guys. Now, of course, we know you're going to have job losses, but you want to have more job gains than you want to have losses, is what I'm saying. And right now, we're not in that. We had a net loss in November of about 32,000. Now, some of y'all might be saying, well, golly, man, that's just ADP. When does the real labor or jobs report come out from the Bureau of Labor Statistics? Who knows? Trump administration is over that, and they don't want to give out no data. They may not give out the data. They may not never give out a jobs report. And if they do, it's going to be 2 or 3 months lag, which is, at that point, what good is it? People want current information so that they can make current decisions. When you get a jobs report in January from November, what good is that? There's no good. Don't even put it out. People, and it's January. What would I do with a jobs report from November when we're in January? What do I want to do with a jobs report from October when I'm in December? You feel me? You got to get real-time data, and we're not getting that out of the current administration right now. You're not getting it with the CPI inflation report. You're not getting it with the Bureau of Labor Statistics jobs report. Just not getting it. And if you do get it, it's going to be laggy. Just saying, man. So all I'm telling you is be careful out there if you're employed by somebody. If you're employed by somebody, you better be careful. Please be careful out there. Please have your multiple streams of income, guys. Because if you're working for somebody that's considered a small business, even if it's a large business, you're subject to being laid off. You just are. Things are not that good right now in the labor market. So please, right now, today, do yourself a favor. Start looking at other streams of income that you can quickly bring online. One really quick one is Uber, DoorDash, or Lyft. If you got transportation. Now, if you're in a big old gigantic city and you can ride around on a bicycle or something like that to deliver stuff, fine. But in most areas, you're going to need a dependable car to be able to do that type of thing. That's one quick way to just add an extra $1,000 a month to your payroll. Just drive. And how do I know that? Because I Uber a lot. Well, I have been in the last couple of years. I've been Ubering, and I talk to the people who are in there. And I tell them what I do, and sometimes they'll share information with me. Because I'll ask, I'm like, listen, man, I ain't trying to get all in your business, but I'm a finance guy, and some of the times I'll be, asking people to consider doing this. What type of money do you make? If you don't mind me asking. And sometimes they'll share that information with me. I think you can pick yourself up, $1,000 a month. I mean, that's $12,000 a year, guys, that you have now taken back some of your financial destiny. Because if all of your income is in one basket with somebody that employs you, and that person says, Richard, appreciate you, man, but don't need you no more. Thank you. Thank you for your service. Thank you for your service. Here's a gift basket on the way out. We'll give you 1 week's paycheck. What are you going to do? So right now, while you're gainfully employed and go get you some side hustles, man. Another good side hustle. I told you one side hustle, Uber, DoorDash, Lyft, because that's just so easy. As long as you got some reliable transportation, that's an easy one. Boom, do that on the weekend. Richard, I work Monday through Friday. I'm tired. I want to come home and pop me a cold beer and watch TV until I go to sleep. If that's what you do with your life, fine. But take the weekends then and do it. Sometimes, guys, we got to do what we don't want to do until we can afford to do what we want to do. You feel me? Sometimes we cannot do what we want to do. We have to do what's necessary. So at some point in the future, we can put ourselves in a position where we can then do whatever we want to do. Why? Because we got assets. We got income. We got multiple streams of income. right? That's one of the things that I wanted to make sure I had, guys. And at 26 years old, that's what I started doing, is figuring out a way to get multiple streams of income so I just didn't have to rely on my banking salary. Because banks can change their mind at any period and say, hey, Richard, great job, but we're downsizing. We're closing this location in your hometown. See you later, buddy. And ain't nobody gonna give 2 cents about me once they close that location down. I'm done. But see, I knew that could happen, so guess what I did? I just started building multiple streams of income. Started with real estate for income, started buying real estate. One little single family every 2 years, adding it to the portfolio. Getting rental income, getting appreciation off the property because it was in a good area that people had a desire to live in. Second thing I did is I said, oh, you know something, what else can I do? I said, you know something, I do like watches. I don't own any, not any expensive watches, but I do like them. Maybe I can turn that into a side hustle. So I went out, did a little research online. You're talking about back in the day, man, 2004, 2005, where, you know, YouTube ain't what it is today. There wasn't no Instagram. There wasn't no TikTok. You feel me? So I had to go out there the old-fashioned way, research, go to watch forums. Right? Went to these watch forums and I just joined these watch forums and I just dived into all the information that was there. And I spent hours and hours and hours on these watch forums just figuring out how these guys that I saw on there selling these watches, how they did it. I didn't contact any of them. I would just go look at their listings and I would then figure out, okay, where can I find these watches at a wholesale type price? And I said, you know something, maybe eBay. I said, maybe I can go buy the watches on eBay. Why? Because I got the ability to negotiate with somebody on eBay. I don't care what they're asking for it. I'm going to tell them what I'm willing to pay. And if I do that enough times, the law of numbers says I'm going to get some offers back to me, some counter offers, and we'll negotiate. So that's what I did. I said, you know something, I'm a pretty good negotiator. Let me get on eBay. And I'll make 50 offers a day in order to get 3 live ones. And those 3 live ones, I'm negotiating, maybe get 2 of them at the price I wanted at. Now I'll take those 2 watches that I bought at a heavy discount and I'll move them over here to the watch forum and I'll sell them for full retail. I taught myself that, guys. There was no course. There was no YouTube guru. There was no training manual. I just applied simple, what? Supply versus demand. See, I learned that in banking. I just demonstrated and took simple supply versus demand. And I also took another concept, buy low, sell high. See, I knew that concept. I knew both of those strategies, supply versus demand, and I also knew the strategy of, you know, buy low, sell high. So I go to eBay and I start making just lowball offers. Sometimes I would make 75, 100 offers a month and get 5 accepted. But I would then take those 5 at a nice little reduced price, move them over to the watch forums where there was a demand. See what I'm saying? Went and found my supply, and then I took it where it was demand. Found the supply on what? eBay. There was an unlimited supply. It was too much supply on eBay. Why? Because tens of millions of people are on every day. Tens of millions of people go on eBay every day. So there's an oversupply of stuff, guys, unless you haven't noticed that on eBay. It's an oversupply. So that was my supply mechanism. And then there was a over demand on the watch forum. Why? Because there was not enough supply on the watch forum, but there was a lot of people on there looking for watches. So that's demand. So I found my supply from eBay and I took it where it was demand and I started flipping these watches. And in my heyday, I did pretty good, guys. From around 2008 to around 2015, 16, I did pretty good, guys. So my point in telling you that is that's how I added multiple streams of income. Nobody taught me how to do real estate. Nobody taught me. Other than, hey, if I buy in a good neighborhood where people have a desire to live, History says that property should appreciate 3 to 4% a year on average. So if I buy it for 300 grand and it appreciates, compounded 30%, I just added an extra $120,000 to my net worth. Right? $90,000 to $120,000, give or take 3%, 4%, whatever. And I extrapolate that over 10 years. If I get a 4% return over 10 years, that's a compounded 40% return on a $300,000 purchase. That's an extra $120,000 in what? Net worth. Because now the property's worth $420,000. I bought it for $3,000. And I just duplicated that process, rinse and repeat every single 2 years. I did that every 2 years. So I started to build this portfolio of these little single family homes and just good, decent communities where people had a desire to live. And I just held them. Collected the rental income. Boom. Next thing I know, I got a nice little equity base in these things that I've just been holding. So you see what I'm saying, guys? This is what I recommend you consider, is get out there and get you some multiple streams of income. Now let's go take a look at these paper assets, and then we're going to finish up with rate cuts, and then we're going to get out of here. So here's where we started at this morning in the market. S&P 500 is little changed as Wall Street weighs job loss data. That's the ADP data. Microsoft falls. Great company like Microsoft is falling. Why? Let's take a look. The S&P 500 was relatively unchanged on Wednesday as traders contemplated the U.S. economic outlook. I've always told you guys, and again, personal opinion, no expert, but I've always told you guys, investors like certainty. They like seeing light at the end of the tunnel. They don't want to look down the end of that tunnel and they don't see no light and it's just so foggy they don't want to see that. They go to the sideline or they don't invest as much. When there's not certainty about something, investors go to the sideline or they don't invest as much. And that's right now what we're kind of seeing here in Wednesday morning's activity. The broad market index hovered around the flat line, while the NASDAQ lost 0.2%. Bogged down by Microsoft. The Dow Jones Industrial Average outperformed, though, advancing 126 points or 0.3%. Microsoft shares fell after the information reported it was cutting software sales quotas tied to artificial intelligence. The stock was last down 2%. See, anytime you hear one of the big boys, one of the hyperscalers, one of the mega caps start cutting their artificial intelligence budget, investors freak out. They freak out, guys, because they understand, investors understand the hyperscalers and the mega caps are the ones that are spending billions and billions and billions of dollars a year on this AI thing. So as an investor who's invested in these companies, they don't want to hear a giant like Microsoft, probably the second, third most valuable company in the world by market cap, is starting to pull back a little bit. They don't want to hear that. That's not good news. Other names linked to the AI trade, including chip makers NVIDIA and Broadcom, fell in symphony with Microsoft because they tied at the hip. The reason they fell, NVIDIA and Broadcom, is because they sell artificial intelligence chips to Microsoft, to Meta, to Apple, to Alphabet, to Amazon. They do. Through Oracle, Intel. So anytime one of the big giant companies especially around AI, reduces its what? Capital expenditure on AI, the companies that actually support that, which are NVIDIA and Broadcom and many more, typically take a dip as well. And that's what you got this morning. NVIDIA was marginally lower, while Broadcom retreated more than 1%. Micron Technology was also under pressure, dropping around 2%. See what happens? Anytime the mega caps or a hyperscaler says they're going to cut back on sales quotas tied to artificial, they're going to cut, it was cutting software sales quotas tied to artificial intelligence. So other artificial intelligence companies take a hit too, especially the bigger ones. Stock losses were mitigated, however, after payrolls processor ADP reported that private payrolls surprisingly declined by 32,000 in November. Now, some of y'all gonna say, well, why is that? Let me walk you through it. Let me walk you through it. Despite the tough reading on the economy, traders or investors were likely betting that the private job losses could clinch a Federal Reserve rate cut at its last meeting of the year next week. See where we're going with this? So even though stocks took a little bit of a hit early, you'll probably see a recovery, in my opinion, now personal opinion today, because why? Now with this bad ADP jobs report or private payrolls report that now the economy is losing jobs, what pressure does that put on the Federal Reserve? It puts pressure on the Federal Reserve to do what? Cut interest rates. Because see, when they cut interest rates, that is a stimulant to the economy. Why? Because when rates go lower, companies can borrow money cheaper. And when they can borrow money cheaper, what do, guys? They go get that money and do what? Put it into what? The company. They put it into the growth of the company, which could mean hiring people. If I can go get, a 50 basis points or a 75 basis point lower loan rate on a $50 million loan to build another facility in a neighboring state that's going to employ 5,000 people, guess what? I'm more apt to go get that loan now if it's 75 basis points cheaper. And now that may employ another 5,000 people. So it stimulates the economy, guys, when the interest rates are lower because it makes borrowing money cheaper. So businesses, investors, consumers go borrow more money. Y'all know that's what we do in America. We borrow money. Well, how do you know that? Well, go look at our national debt, guys. We got a $38 trillion national debt. We borrow money and we borrow a lot of it. Our federal government borrows money every year to fund the government. Americans, or people that live in America, have $18 trillion in consumer debt, guys. 18 trillion. We're a debtor country. We're a country of borrowers. So anytime rates come down, it does what? Increases borrowing. Anytime rates come down. So investors know that. So investors are saying, listen, this job loss thing, in the short term, we'll go ahead and not really pay it any attention because we know we got interest rate cuts coming. And I've already went on record and told you guys, I believe the Fed will cut rates next week on December 10th. I think they will, especially now with this ADP report. They're not going to get any more data, I don't think. Some people are thinking, okay, maybe they'll get the jobs report from the Bureau of Labor Statistics before they go to their December 10th meeting so they can have that data. Well, I don't think they're going to get that. That's my opinion now. I could be totally wrong, but I don't think the Trump administration is going to provide any data. They don't want to provide no data. Because in my opinion, the data ain't very good. And y'all already know President Trump gonna come out every day and tell you everything is amazing. And he's not gonna provide any data to mess that theory up. He's not gonna, his administration is not gonna provide any data contradictory to what he's saying about everything's great. Prices are down, inflation is gone. He's bringing in $21 trillion and all this other stuff he be talking about every day. He's not going to produce data that says, oh, no, that's not true. He's not going to do that. So you're not going to see no labor report. In my opinion, you ain't going to see no jobs report for November. And if you do see it, you might see it in January when we're already 2 months out and people don't care about it no more. You might see it then, but you're not going to see it before the Fed meeting. I think all you're going to get is this ADP data. Now, I could be totally wrong, and maybe they will come out with something. I don't know. I don't think so. My opinion. So what do we got here? We got the labor market based on the latest ADP report weakening. We're losing jobs to the tune of 32,000 in the month of November. So we're losing jobs again. Initially, stocks kind of stayed the same. Why? Because short-term investors are thinking, okay, we know the labor market is starting to tank again, but it will force the Fed to reduce rates because we know when rates go down, assets go up. So investors are like, great, because they don't care about us 99 percenters. I'm talking about the 1% of investors, the big boys. They don't care about us. What they care about is how cheap can we get money to borrow? How cheap can it be? Because when money gets cheap, they know companies borrow money. And what do companies do when they borrow money? Hopefully, they put that money into what? Growth of their company. Revenues go up. Profitability goes up. Therefore, what goes up? Stock price. And who benefits from that? Investors. So in the short term, investors, they don't care about the labor market. Not in the short term. What they care about in the short term is that they get interest rates as low as they can get them. Because they know when interest rates go down, assets go up. And they're the people that hold the majority of the assets, guys. Yeah. 1% of the population controls 99% of the wealth. So they have a vested interest in seeing from a short-term standpoint, the labor market fail. Now, they don't want it long-term, but for the short term, they are okay with it failing. That's why you don't see the stock market falling through the floor right now. That's why you still got the stock market hanging in there, doing pretty dang on good. Let's go look at the three major indexes. Let's look at the three major indexes. Oh yeah, so we get a bad ADP payrolls report. November, economy sheds 32,000 jobs. Now let's go look at the market, the three major indexes. The Dow is in the green, over 47, almost headed to 48,000 points. Not even fazed by it. Because now they know interest rates are coming down next week. Boom, you look at the S&P, what is it doing? Headed to 6,900 points. Guess what? Ain't fazed one bit by it. Why? Interest rates coming down, so they're positioning themselves for assets to go up. And then you look at the NASDAQ, 23,383 points. Not bad. But what happened though to the NASDAQ? Well, you had Microsoft come out with that bad news about AI and software, and they're going to be cutting back sales, all that stuff. Way over my pay grade, but it wasn't good news. So you got the NASDAQ, although still over 23,000 points. Go do your history on that. That's still, in my opinion, still amazing. Go look at where the NASDAQ started at in January 2nd, 2025. Matter of fact, I'll give it to you. You don't even need to go. I'll go for you. Let me just, because see, some of us will miss this and we can't miss it. Oh, NASDAQ is, no, let's start. What was the NASDAQ on January 2nd, 2025? Here we go. On January 2nd, 2025, the NASDAQ composite closed at 19,280 points. Where is it at right now? I keep telling y'all, man, y'all got to pay attention to this stuff. 23,384, up by what? 4,000 points. You see where I'm going with this? None of the three major indexes are worried about the economy losing 32,000 jobs or private payroll, whatever, jobs. I call them jobs. In November, the market doesn't even care, guys. Because in the short term, that's good news for them because it's going to force the Federal Reserve next week, a week from today, it's going to force the Federal Reserve to lower interest rates by 25 basis points. Investors also know next year, Federal Reserve Chairman Jerome Powell, who actually was a Trump appointee in Trump 1.0, will be leaving. And then Trump 2.0 is going to put his own guy in there. And a lot of people think it's Kevin Hassett, who is nothing but a Trump loyalist, 1,000%. And he's going to do whatever Trump tells him to do with these interest rates. Investors know that too. So what are they doing right now, guys? Big boy investors, in my personal opinion, no expert, personal opinion. You go out and do your own homework and you can come up with your own conclusion. But my personal opinion right now is investors have taken the month of November to really buy the dip. That's my opinion. I think they took, see, historically, guys, September is the worst month for the stock market. September. That's normally when you see a little dipsy, it's kind of crazy, market's off 3 or 4% for that month. Guess what happened this September? It reversed itself. It was a great September. Go do the homework now. Don't take my opinion. Go do the homework. I'm just giving my opinion based on my research. Not that it's right. In my opinion, September was a good month. Historically, it normally isn't. So what did investors say? Guys, we got to have this down month. We got to have a month where we consolidate, right, and correct. That's what investors said. I'm talking about big boy investors, not me and you. Because see, you and me, we're under the belief that the stock market is supposed to go up all the time. It never go down. Oh, it never go down. No. Big boys understand in order to recalibrate, they got to bring this thing back down, 5%, 8%, whatever it is. They got to bring it back down, let it consolidate, let it correct down, and then they go back in and position themselves for 2026. They didn't do that in September because everything was so hot. It was hot. They didn't do it. Rolls over to October, still hot. Boom. They said, let's do this thing in November. So I think that's what happened. The 1% started propagandizing everything. Oh my goodness, big tech. They're too overvalued. They're priced to perfection. Let's get out of them. It's an AI bubble. You see all that propaganda they start putting on mainstream media, all on these little podcasts, every little TikTok, every little, that's what they started playing over and over and over, right? And the reason they did that is because they wanted everything to come down. They wanted prices to come down. They wanted a consolidation. They wanted a correction. They call that a manufactured correction, a manufactured consolidation. They wanted it. All of this is my opinion, guys. It doesn't mean it's right. I'm just telling you my opinion. Please understand that. No expert here. Go do your own homework. So now you get the month of November. And guess what happened, though? This is what happened in the month of November. I believe we got the either the ADP payrolls report or we got some other, maybe we did get a jobs report, but I think it was the ADP report. We got something that showed that the job market was getting better. This was like last month. This was in November. So then that was exactly what they needed. Because guess what they said then? Oh, we're not going to get a rate cut now. Since the labor market is coming back, we're not going to get a rate cut. And then they said, because they know if they could say no rate cut, People would start bailing on equities, right? They start bailing. And that's what happened when they threw out the propaganda that, oh, no rate cut because now the labor market is doing much better. I think we got a report where it said the labor market added 119,000 jobs or something. Maybe that was the October report we got in November, or maybe it was the September report we got in November, but it was a late report that said the economy had added 119,000 jobs. 1% ran with that. Oh, that's propaganda. Let's propagandize so that people think there won't be a rate cut. Plus, let's also propagandize that these hyperscalers and these mega caps are overvalued. They're overvalued, they're priced to perfection. That's what they did. They took those two pieces of information in November and drove down and manufactured a correction, a pullback, a consolidation. Now, guess what they're doing? Since they took the whole month of November, buying everything at a discount, buying the dip. Now, guess what they're doing? The reverse. Oh my goodness, labor market's in trouble again. Now we got a rate cut coming. Oh my goodness, guess what? They're starting to buy NVIDIA again. They're starting to buy Broadcom again. They're starting to buy all these hyperscalers again. Now, of course, we got the news about Microsoft this morning, but don't let that bother you. Go look at what Google has been doing. Go look at Google stock. If you think there's trouble in the Magnificent Seven, just go look at Google stock. Go look at NVIDIA stock. Just go look at some of the Magnificent Seven companies and you'll see these companies are up year to date. They're not negative, they're up. But this is the propaganda they try to control us with so that we buy when we should be selling and we sell when we should be buying. So you got to know, for me personally, I'm giving you my personal opinion, guys. It's time in the market as opposed to trying to time the market. And anything these guys say, I do the opposite. I don't really listen to what they say because I know what the whole game is. The whole game is to do what? Propagandize us. And get us to do what? Buy when we should be selling and sell when we should be buying. And that's the thing we got to keep in mind, guys. Again, I'm no expert here. I'm not a financial advisor. I'm just a guy on YouTube giving you my opinion. And I have to say that over and over and over because there are the powers that be. They want to try to act like I'm trying to tell people what to do when I'm not. So I have to put this in these videos, man, so that any human being that look at it can understand that I'm not doing that. But you know how this world is. You can't worry about it. I can only control what I can control. And that's what I would tell you. Control what you can control in this life. Don't worry about things you can't control. Just control the things you can control. Control your attitude, control your effort. Get some priorities in your life that mean something to you more than money. Find priorities that you can place above money in your life, guys. Get you multiple streams of income, guys. I've already walked you through my story. Get you some multiple streams of income, guys. Don't let these people catch you with your pants down. Do not let these people manipulate you. Do not let these people keep you dependent on them for the rest of your life. Watch the 1%. They'll tell you how to move. Just watch them. Pay attention to them. Go out and do research. When you hear the 1% tell you something, go research it. Don't just take their word for it. Go research it. They're talking about Microsoft, right? Let's just take a look at Microsoft. Let's see what and then we're going to get out of here. Let's take a look at Microsoft this year. Because that's the one they're saying, oh my God, nobody's on Microsoft. Nobody's going to buy it. Okay, well, let's just see what they did year to date. Microsoft is still up 15% year to date. So y'all take it for what it's worth. I keep telling y'all, don't, this sort of short-term propaganda cycle they're trying to run y'all through, go do your homework. Microsoft year to date is up 15%, guys. But yet and still, you read the headline today, they're about to go bankrupt. Let these people tell it. They did about to go bankrupt. Okay. Like I said, man, I'm no expert here. I just wanted to give y'all my little 2 cents today. I hope you enjoyed the video. Like I said, man, get yourself down in that description box. Check out that Moo link. Like I said, man, you know, they got some nice goodies in there for you guys. Again, and again, I'm not saying you got to do anything. I'm just telling you, if you want the opportunity to be able to use a good self-directed brokerage app, check them out. Like I said, man, it says Moomoo is offering up to $1,100 in stock rewards and NVIDIA shares. If you deposit $1,000, you'll get 120, and 100 of that is my exclusive reward. That's just for my link, right? So go check it out. Only available through my channel. So go check that out and all the rest of the goodies. Check out the second link, which is the Wealth Builders Financial Community on Patreon. Y'all know all we do in there is try to help each other build wealth. Ordinary people, 99 percenters, no experts, nobody trying to tell you what to do, just sharing best practices, golden nuggets, tips, what's working, what's not working, live stream every Monday night, community chat every day, access to me through direct message, unlimited. So if you're interested in any of that stuff, click on that second link, go to Patreon, sign up, come join us. Send me a DM, let me know you're rocking with us so I can say thank you, and then we can go to work. Stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I'll catch you on the next video. Peace.